So I have switched on the recording and my screen is here. Okay, one question. How many of you are doing trading, momentum trading or positional trading or different types of trading in the market? I hope everyone is doing that. Yes?
Yeah.
Yes, sir.
Have you ever come across this company? Godrej Properties Limited. The name is Godrej, very big name, very big company, very big promoters. The market cap of the company is 44,568 crores today. Large cap company, na? Yes or no?
Yeah.
Safety Net, large cap company. And who is the promoter over here? The promoter is Godrej Industries is the promoter. Godrej and all Godrejes are the promoters. Big name, big trust. Nisba Godrej and Godrej Industries is a company who is holding all these companies, sister concern companies and whatnot. Right? So let's look at this company, and the stock price sometimes goes up, sometimes goes down, depending upon the market. And in the last so many years, the stock price has gone from 500 rupees to 2,500 rupees. And now it is at around 1,500, 1,600. Let's look at this company. So one thing which catches my attention is, why is there need for the company to regularly dilute its equity? Maybe because it is a real estate company and they are developing lots and lots of square foot of land, so that is why they don't need this more of fixed assets. They could hire, and these investments are into projects where they are buying the land, somewhere they are developing, some they have a JV or something of that sort, right? So let's see if this is equity share capital or this is more or less equity share capital. But when I look at the reserves carefully, the reserves are going up. Okay, they have profits, they have retained profits. Why did the reserve go down over here? From 1,365 crores to 1,351 crores. The number is very more or less flat to very less. The number has gone down just by 14 crores. But why did the reserve go down? So what I understand is my starting value of the reserve plus my profit after tax minus my dividend payout is my ending value of the reserve. So profit after tax minus my payments, dividends given out is my retained earnings. So reserve plus retained earnings is my new reserve. So was my PAT negative over here in 2013? 2013, the company made a PAT of 138 crores. What was the dividend payout percentage? Was 23%. So if I say 138 crores into 0.23 is makes it around 31, 32 crores. So out of 138 crores, the 32 crores was paid out as dividend. So what is left over here in the PAT after paying dividends? Anybody?
106.
106. So ideally in 2013, this 106 should have been added to this number, and this number should have been 1471. But rather this number is 1351. So there is a discrepancy of 120 crores. Right? With my naked eye, this number looks to me as 14 crores down, but actually this number is 120 crores down. Till here, if I look at the profitability of the business, that means very well 1 year of profits. Something has happened which I'm not understanding. Something has happened over here. 1 year of profits have gone away from the hands of the shareholders. Understanding till here?
Yes.
Yeah.
To cover up this situation, the very next year the company dilutes. and the face value amount goes here and my premium goes here. Let's have a look. Again, the same situation happens and the company dilutes. Now, in spite of the dilution by 8 crores, so some number of 15 to 16. Let's look at 15 to 16. Scheme of amalgamation and this and whatnot they have done. Shares have been allotted. These many shares have been allotted. So they have done a dilution over here. And dilution is never done at par. It is always done at a security premium. So let's look at the profits in 2016. 159 crores. What is the dividend payout? 0. So all these 159 crores should go to the reserves and surplus. 2016. Here what is happening? From 1747 crores, I should go up by 159 crores, which makes it 1906 crores. Plus, I'm doing a dilution over here of 8 crores. So first, let's go and check what is the face value of this company. Let's go and check what is the face value of this company in 2016. Face value is 5 rupees. If 5 rupees is the face value, so and how many shares I have diluted? ये कितने शेयर हुए? कितने शेयर हुए? Sorry, 16. ये कितने शेयर हुए? How many shares?
1.67 crore.
1.67 crores. So 5 rupees of the 1.67 crores will go into my equity capital, and the balance will go into my increment of reserves. So in 2016, let's go and look at the stock price of Godrej Properties. I don't need the Excel for this. 2016. Suppose my stock price was around 330 rupees or 350 rupees. Take it 350 rupees. So out of 350 rupees, the right issue or the amalgamation issue, whatever I'm doing, 5 rupees will go here. तो 350 रुपए में मैंने 1.67 crores allot करे हैं. 5 rupees will go here and 345 rupees will go here. So 345 rupees into 1.67 crores makes it 576 crores, which money I have picked up from dilution from public, plus 159 crores is my profit where I have given no dividend. So 576 plus 159 makes it 735. So ideally this number here should go up by 735 crores. 1747 crores plus 735, this number should be 2482 crores. Now we had seen the adjustments in the asset side. Now we are seeing the adjustment in the liability side. But this number is 1687 crores. That is a downfall of tentatively 800 crores. The downfall which year was around 200 crores has gone up to 800 crores. So here, downfall year was 120 crores. Has gone up to 800 crores. So here, the shareholders' money of 120 crores was gone from the business. Here, the shareholders' money of 800 crores is gone from the business. And my stock price is going up after that. And again it goes up. And again it goes up. Why? Because Godrej has a brand name. But what is happening in the numbers? Let's proceed further. Now here again the same problem. And what is the profit in 2018? 87 crores. Again the dividend is 0. No dilution over here. So ideally this number should go up by 87 crores. But it goes down to a lot. So 1896 plus 87 my retained earnings minus 1102. Again 81 crore. So 180 crores of money taken out from here. 800 crores taken out over here. 881 crores taken out of a year. And to cover up the same, because my book value has gone down, so my debt to equity ratio will look bad on these numbers. The company dilutes the very next year. And for the debt to equity ratio to come down more from 2,354 crores, the company dilutes the very next year and the very next year. So my debt to equity, which was a pathetic number here, looks nice here. So please calculate the debt to equity here. My equity is 108. My share capital is 108. My equity is 1102. So my book is 1210 crores and my debt is 3703. So 3703 divided by 1210 makes it debt to equity of 3 times, 3.06 times. Calculate my debt to equity over here. 139 plus 8181, 8320. So 4542 divided by 8320, 0.54. Doing nothing, just by picking up money from the public, the company has improved the ratio over the last 3 years. But the company has eaten 120 crores here, 800 crores here, 880 crores here. So tentatively 881 plus 800 plus 120, 1800 to 2000 crores of shareholder capital has been eaten away, has been vanished from the business. What is my total, so forget the COVID years, what is my total profit the company has made from 2010 till 2020? Can anybody quickly add up these numbers? I'll wait for 2 minutes.
सर 1817।
तो इसका मतलब ये है कि जितना प्रॉफिट कंपनी ने बनाया उतना कंपनी ने गायब कर दिया। और प्रॉब्लम यहाँ तक तो वो डिविडेंड दे रहा था, यहाँ से उसने डिविडेंड देना भी बंद कर दिया क्योंकि पैसे ही नहीं है। कब तक चोरी का घड़ा कब तक लेके चलूंगा? 1817। अब आप ऐड करो 120 प्लस 800 प्लस 881, 1801 बराबर हो गया ना? जितना कमाया उतना बाहर निकाल दिया, शेयर होल्डर को पता भी नहीं चला, राइट? And the company is Godrej Properties, and your stock price is going up. This basically is called equity write-offs. When I hide some expenses from here, I don't show these expenses in my profit and loss account. I hide the expenses over here and I directly write those expenses from my reserves and surplus in the balance sheet. So to counter this, company has come up. To counter this, government has come up with IND IAS systems. Summary of adjustment in account of adoption of IND IAS 115. Reconciliation of net worth. Increase in the deferred taxes credit on account, decrease in profit before tax on account of adoption to IND IAS. Why there is a decrease? No, IND IAS 18 and on transition to IND IAS, the company recognizes the revenue when it determines the satisfaction of performance at a point in time upon transfer of promised products to the customer in amount that reflects the consideration the company is supposed to receive for this. In the said transaction, the company has adjusted the promised amount. मतलब जो मेरे को उम्मीद थी मैंने उसमें कुछ एडजस्टमेंट किया है for the effects of time value of money, where the contracts with the customers contain a significant financing component. समझ में आया?
नहीं सर।
हाँ, समझ में आया?
नो सर।
वो ये कह रहा है कि IND IAS में आने के बाद मैंने यहाँ क्या कर रखा था अपने बुक्स में, अपने आप सपोज मैं आपको बोलता हूँ कि आपको कुछ पैसा 6 महीने में मिलेगा और मानो आपको 6 महीने में 1 लाख रुपए मिलेगा, ठीक है, और मैं कहता हूं कि आपको 1 साल में 1 लाख में मिलेगा, दोनों के लिए आप आज मुझे कितना पैसा दोगे? हाउ मच मनी, मेरे पास एक स्कीम है, मैं आपके पैसे बना के दूंगा फॉर एग्जाम्पल, हाउ मच मनी आर यू विलिंग टू गिव मी टुडे, in return in 6 months I will give you 1 lakh rupees of profit, and in 12 months I will give you 1 lakh rupees of profit, or maybe 1,10,000 rupees of profit. How much money are you willing to give me today?
So depending upon the rate of interest, what you will be giving me.
I am not taking about interest. How much money are you willing to give me today? मैं आपसे ब्याज पे नहीं ले रहा हूँ. I'm putting into business. I am a stock. How much money are you willing to pay me today? Nobody has the answer.
How much you will return, sir, after 6 months?
1 lakh.
Around 1,70,000, sir.
Are you willing to pay me 1,70,000 for a profit of 1 lakh in 6 months? Right?
No. Yes, but 6 months, after 6 months, he will give 1 lakh, and after 1 year, he will give 1 lakh now, sir. So, the total 2 lakh he will give me. For that, today I will give 1,70,000.
I am saying what you will give me today.
Great. For 1 lakh, I will give around 85,000 to 90,000.
Okay, you say in 6 months' time you will give me 90,000 rupees. So for a right to consider around 1 lakh rupees in 6 months. Right? And in a period of 12 months, 1,10,000. Right? Yes or no? So that is what he is saying. You are expecting a return of 22% to 23%. That is what he is saying. I had adjusted for this much money as per time value of money. I was discounting the money which I was supposed to get by X percentage today, which could have been 20% or 23% or whatever assumption he wants to take. But since now I have shifted to Ind IAS 115 and there are certain regulations, so I had to take a adjustment for the time value of money, and that is the reason my 1,202 crores has been reduced, written off from my books of accounts. The cumulative number. Earlier it was 991 crores adjustments. But now I cannot show this to you in profit and loss because my company will go in a big loss. So that is the reason I am slowly adjusting my reserves downwards. And if my reserves go down, my company has a risk of bankruptcy. That is why I'm diluting and picking up money from the public. And if I am not able to dilute, what I am doing is I am merging my sister concern firms into myself. So I can get their equity reserves and show them as an added number over year and year. And I am Mr. Godrej. Big name, brand value, and my stock price is going up. Does it scare you? Does it alarm you? Does it moves you? What does it do to you? And in COVID, and after RERA, because this is a real estate company in COVID, I am getting problems. But no, I am a chartist. I am an artist. So I am looking for supports. This is a support, this is a support, this is a support, or this is a support, and whatnot. The point is, large caps don't do manipulations. That was the belief. And who is the major holder of the company? Who is the major holder of the company? Just to show, after the lockdown issues, the company had sold. Promoter had reduced stake. Promoter had reduced stake. Promoter had reduced stake. Just to give back the confidence, they bought again. They sold again. They bought again. जब इंसान पानी में डूब रहा होता है तो फड़फड़ाता है. Is this the act of a promoter in 3/4? Whenever you don't have money, you cut down to get money, and when you get scared, you increase to show to the shareholder that I am with you in the wealth creation journey, and I'll come on Twitter and give you lots of knowledge. Cumulatively, the promoter is selling. And there are so many promoters. My God. Right? And everybody is invested. Emerging market funds, Nomura fund, ye fund, wo fund. Why? If a retail person like you and me can see that the company is doing equity write-offs and hiding the expenses from the profit and loss account and showing and writing of the equity, can't these super investors, FIS, DIS get this information because they have much more research than what we have? Still they want to buy and hold. SBI Magna Fund, म्यूचुअल फंड सही है. नोमुरा फंड, BNP फंड, गवर्नमेंट ऑफ सिंगापुर, म्यूचुअल फंड सही है. DSP एसेट एलोकेशन फंड. अब वो आपको समझना है, दिस इज योर अंडरस्टैंडिंग. म्यूचुअल फंड सही है, a big brand like Godrej सही है, और your understanding सही है. And we could be 100% wrong. But are there only opportunities like these companies? There are tons of companies to look at. Another company which I've not seen earlier, but I doubt is doing equity write-offs, is a company of 62,000 crores market cap. Are they doing equity write-offs? And the very next year, dilution, preferential stock. Are they doing equity write-offs? Look at the increase in the debt. Look at the increase in the assets. So a nice story. But look at the increase in my sales and look at the increase in my profitability. Interesting story. What is actually eating me? Depreciation and my interest cost. Are they doing equity write-offs? Here is an example. And when you do this, ideally, I need money from the bank. And to make everything look nice, the very next year, I issue preferential stock, preferential shares. And I take money from nice, good investors and show that money as reserves. So my debt to equity ratio becomes better. And many big fund houses, FIs, have a 34% holding. And look at the holding of the promoter. DI is also reducing. Don't they have the research? Vanguard pension fund, or there is much more to it. LIC is always there to save. LIC is always there in every company to save. And There are several reasons, obvious reasons, which you can understand by not timing the market on the chart or with a stop loss, but rather spending time in the market. And the market cap is 62,000 crores. Now, there are several more ways to do it, but if we keep on continuing, we spend hours and hours and hours how to hide expenses on the P&L and show more profits. To check what is happening today, I don't know what is happening today. I can make a screen for my reserves. Reserve. I don't think I can do this. It's less than reserve last year. There's no value over. I cannot make a screen over here. There's a limitation. So this is, and this is 2019 annual report, and in several reports the company is doing the same thing, writing of reconciliation of net worth. Why will I use the word reconciliation when I have to do some adjustments to my net worth? So I hope this is helpful to you. And one question: how many of us have seen or evaluated businesses on such criteria? Anyone? Has anyone done?
No, sir.
Achha, another way to show bogus revenue is when you take a loan from the bank, right? And you show in your books that you have sold some item to the bank, and you record that as revenue. Another way to decrease your receivables is when you do bill discounting. I have sold to some exporter and I got an LC. That LC will materialize in 3 months, in 6 months. I am stuck on working capital. I need the money. I go and give that LC to the banker. That this LC is for 1 crore rupees. The banker says, I will charge you 2% interest on this or 3% interest on this. The banker will give me 95 lakh rupees and the banker will make 5 lakh rupees. So my receivables will be down. And I will show the market the good picture. Bill discounting. So in the next session, we will try and get some sense of more such ways to manipulate. And sometimes companies making good amount of profits will save their profits in a box. Suppose if you go to the kitchen, you have a box where you keep your biscuits which you have with tea or coffee. So I will call this a cookie jar box. So they will save their sales and their profits in a cookie jar box. So whenever in the future they require, they can open this cookie jar box and give you a systematic growing sales and a profit number. They will take a big bath or a big write-off and adjust all wrongdoings in the past. Right. There are several more ways to do it. We'll take a look at few more of them. Okay.
Sir, one question.
Yes, please.
Sir, when we are talking about bill discounting generally with recourse, to the beneficiary. In this case, if company is doing a bill discounting, so if it is with a recourse, then will they cover that as a notes to financial statements?
No, ideally no. Why will they cover that? And even if they cover that, who will read? We don't read. They will only give you the details of bill discounting. Nothing more than that. A simple plain one-line word. Because he wants to hide it from your knowledge. And he doesn't want you to find it out. He will give it in a small font. He doesn't want you to find it out.
So, sir, in that case, if he gives a bill discounting and then again, if it is a course, if it is a through recourse and tomorrow, if default happens and banks comes for the recourse to the company, then where this figure they will pop it up in where
Sir,
it might be a single line.
this figure will not pop it up. Ideally, my assets will go down my assets will be reshuffled without disturbing my liability side of the balance sheet. You will not find this figure anywhere on the books. You will have to find this number in the notes to accounts, and which usually will be written in a small font.
So, sir, that will not go into current liabilities because if bank is coming to me, okay, you have done this
No,
discounting.
that will not go to current liabilities. Rather, I will not disturb the liabilities. I will show that I have received the money from my receivables, and I will show cash in my bank.
Okay.
Because the balance sheet has to balance now. So suppose I reduce my receivables by 10 crores, I will show cash by 10 crores. So one asset going down, another asset going up, the value remains the same on the balance sheet. So that will
No,
match.
sir. That I understood. My point is, let's say I have done a bill discounting 3 months back. Now, the bank is not getting the money from that particular LC or bill. Okay. Now, bank comes to me, boss, this money is not being paid. Whosoever
Yes.
opened the LC or whosoever on you have drawn the bill, they are not
Yes.
paying me. You pay me up. Then
Yes.
a bank ideally comes to a company for claim. Then company has to show maybe that claim somewhere. It might first maybe it might come up in contingent liabilities, or if a claim is substantiated,
It
then they might
will,
have to show it as a
uh,
loan.
it will come in contingent liabilities, not as a loan.
Okay,
It will.
if claim is substantiated, then they have to show it in liability. Correct.
They will not show it in loan. They will show it in contingent liabilities. They will not show it as loan.
But sir, contingent liability में show करने के लिए, if I am correct, they will show only if that event has not happened. In this case, if bill discounting they have already done and the bank is coming for recourse because they are not getting paid up, so that event has already occurred. So ideally, they
That
should
they
make a provision or they should show it in the current liabilities to
the
pay to the bank.
the promoters are much smarter than me or you. What they ideally do is they will take a loan from the bank and they will pay through the bank. And
Understood, sir.
again they will come back to the same structure. So if 90 days is my NPA criteria, in 85 days I will take a loan from the bank, pay to the bank, and again will come up with an LC for bill discount and pay back my loan.
I agree. They might do another bill discounting, pay it
Huh.
up, and then postpone it for another 3
But the
months or
point is,
6 months.
even if I emphasize everyone should read the annual report, we will read just the current annual report. We will not read the series of reports in the last 5 years or 10 years. Who has the time?
Correct, sir.
When fast money is being made on the chart, who has the time?
Agreed.
Chali, okay. Thank you.
Thank you, sir.
I've saved the recording. I'll just say the recording.